Episode of Fireside Chats with Doc2Doc. I'm Dr. Josh Lumley, a board-certified anesthesiologist and head of customer experience here at Doc2Doc Lending. And whether you are on your way to the hospital or catching a break between shifts, or just trying to make sense of all the non-clinical stuff that life is throwing at you right now, thanks for joining us. So today we are covering a topic that may not be glamorous, but it's definitely crucial: protecting yourself with DI. And no, that's not diabetes insipidus, but that is that is not diabetes insipidus. That is disability insurance. And to help us dive into it, we have Greg Elsbury joining us. Greg is the Strategic Partnerships Manager at Pattern, a company dedicated to helping physicians like you and me navigate the complex world of insurance and financial planning. Greg joined Pattern in 2023, and his mission is clear: to educate residents about non-clinical issues and overall wellness. He's all about the education first approach, making sure the next generation of doctors is not just clinically brilliant, but also prepared to handle life outside the hospital walls. And with nearly a decade of experience in enterprise sales and business development, Greg has truly found his passion in helping physicians protect their biggest investment, which is themselves. So as we get started, feel free to send us your questions, send them afterwards. We're going to try to answer them as we go along. And of course, we're going to share the recording with some additional resources afterwards. So let's get into it. Greg, thank you so much for being with us this evening, and welcome.
Thank you for having me. I usually start my lectures off with who's excited to talk about insurance, and it's just crickets, right? So we're gonna make this fun tonight, and I appreciate you guys having me.
Yeah, for sure. So welcome, and thanks for being here. And so I guess to start off with, part of the reason I think that you might get the crickets response is not so much that it's a boring topic, but frankly, as physicians, we're sort of indoctrinated with this ideology that you have to know everything all the time. And I think insurance is a subject that, frankly, we just don't know a whole lot about. So to start at the top, really, why are you passionate about this subject, and why do you focus so much about disability insurance? And frankly, why is it that important?
Sure. Yeah. So Pattern itself, we only sell disability insurance and term life. And so when you use the term insurance, it's kind of this wah, right? Like nobody really wants to buy insurance. We have to buy mortgage insurance. We have to buy auto insurance. There's those insurances that we're mandated to purchase. Disability insurance isn't one we have to buy, right?
Yeah.
So immediately there's this kind of conception around, what's insurance? Do I really need it? Are they going to pay it out? All those things, right? And so we really like to talk about, disability insurance from the standpoint of really protecting your lifestyle as a physician, right? And so how do we protect the investment that residents are making in training to be able to go out and trade their time for money for the next 30 to 40 years? We got to protect that income, right? Because with that income comes a lifestyle. The houses, the cars, just, the savings, the investing. And so how do we go protect that lifestyle? And when we frame it that way, it seems to make a little bit more sense. And so, disability insurance is crucial for really all physicians, right? I always say to residents, they have targets on their back, right? And actually, Dr. Marshall from Doc2Doc gave me this one, the Henrys, right? They're high earners, not rich yet. Right.
Yeah,
And I thought that was brilliant, right? Because again, I'm a second year resident and I have this income, right? This opportunity that's a year, 2, 3 years away. How do I start thinking about protecting that now, right? How do I make a plan going forward? And disability insurance is always kind of a fundamental aspect of a financial plan, because with no income, we can't do anything else, right? I can't invest in real estate. I can't invest in my 401k. I can't, start saving for an emergency fund if I don't have that income. So it's really kind of a fundamental aspect for not only high income earners, but obviously physicians, specifically. So,
well, so thinking back to myself in residency, I don't necessarily remember for benefits enrollment when I was a resident. I know when I became an attending and I got a private practice job, that started to become very, very clear to me. Do residency programs, do they typically offer disability insurance? Is that something that I would enroll in with my, with human resources and with benefits enrollment?
Yep. Upon enrollment, that's typically one of those check the boxes, right? And that's really kind of consistent for any W-2 attending or anybody that's working at a hospital. If they're a W-2 employee, they're gonna most times get access to those group benefits, right? And so, yes, in residency, trainees will get access to different benefits, whether that's life insurance, short-term disability, long-term disability, things of that nature. And so back to, kind of going in front of residents, which is what we do all the time,
Yeah,
I'll ask a group and say, hey, who here has disability insurance? And it's either one person raises their hand, it's no one raises their hand, or like 8 people raise their hand, right? And those 8 people raise their hand, they're thinking, well, yeah, we have it through XYZ University,
sure.
right? And so,
Yeah,
so yes, there is a level of protection there, but it's not always enough, right? And
got
so
it.
a lot of times, whether they're in training or they're early attending, or even, somebody who's, into their career like yourself, how are we protecting that full income?
Yeah,
And there's a lot of nuances between a group policy and an individual policy, right? So group policies, they're typically, those are taxable dollars, right? So the
okay.
employer's typically paying the premium on that. And you can't really get in and out of it, right? I mean, you're kind of checking that box as, yes, I'm saying I will be part of this group and get access to these benefits. So
Yeah,
any benefit that we receive, from a group policy is going to be taxed. It's not portable, right? That's a big thing. So if I move and I graduate training and then I go on to fellowship, or I go, start my attending career, that policy is not coming with me, right?
got
Now,
it.
if I
Got it.
go and sign up as a W-2 attending somewhere else, most likely I'll get an opportunity to get group benefits there. But that policy is not coming with me. And so the biggest thing, though, is it's not typically own occupation, right?
Okay.
Which is what physicians need. So that true own occupation, to kind of get into the weeds here a little bit. I know we
Yeah,
just
let's
started,
do it. Yeah.
but that's the most important thing that physicians need, And so when you look at a true own occupation policy, what that's protecting is your specialty and
Got it.
your duties as a anesthesiologist, as an orthopedic surgeon, right? So if you guys can't do those material and substantial duties of that specialty, you're going to be made whole through your benefit. Okay.
Okay.
Now, the interesting part of that is, say I'm, in the OR, a clinical anesthesiologist, right? And I have back issues, or I get cancer or something of that nature, and I can't work anymore, but I want to go teach. Maybe I can do research and I can go be gainfully employed elsewhere. I can still receive my benefit from my policy because it's a true own occupation. I can't do my occupation, but I
Yep.
can still go earn income over here. That's
Got it.
massive.
Okay.
So really,
Yep.
disability insurance is protecting what residents are getting trained to do,
Got it.
right?
Got it.
So
So,
that's the
okay.
biggest thing.
So we talked about, like, being a W-2 employer. I can't speak for other specialties, but I can say within anesthesiology, we are really, over the last 3 to 5 years, really post-pandemic, have seen an explosion of folks who become 1099 independent contractors. So spend a week at this hospital or spend a month at this hospital, then pick up another gig at another hospital, maybe pick up some weekends with another group at another hospital. So obviously they are not employees, they're not W-2 employees of a given practice or an academic group or an organization. How does this work for them?
It's even more important for them, right? Because they don't have access to that kind of baseline group benefit. So they're still going to need to go get that individual policy. Like, that's a must, right? When we
Yeah,
talk to companies that do locums, or, whether it's kind of the Uber for locums, there's so many
sure.
fun
Yeah,
things that come out. We were just at ASEP this week, Emergency Med Conference in Vegas, and it's always fun to kind of see what's new and up and coming. But those docs that are doing even if they're moonlighting as a resident, right, and they
yeah,
still have group benefits from their employer, they still need to have that additional coverage, right? And
got it.
so for locums or for 1099s, it's super important. And so typically what we'll see is a stack methodology. So you always have your group. You may not if they're 1099,
Uh-huh.
but you'll want to stack what's left to cover that full
Ah,
protection of that
got it.
income,
Got it.
right? So you're
Okay.
never going to really be able to protect. If I'm making 400,000, I'm never going to be able to really protect 400 because of
Yep.
taxes, right? So
Yep.
typically it's about 60%. And so with that group, you'll want to kind of stack and make sure that you're covering the full income there. And a lot of times docs forget about that. They'll get it as a
Yeah.
second year, and then they'll be like, oh, wait, I only have a $5,000 a month benefit, but I'm making 30,
Yeah.
right? Ooh,
Yeah.
I better go increase that. So to answer your question, it's of the utmost important that anybody who's 1099, they should have their own individual policy. And really, to digress a little bit, we had a situation here earlier this year where we had an emergency med group. I believe there was 100 physicians, and the hospital basically said, "Hey, there's 60 days, and you guys are all going from W-2 to 1099."
Wow.
Okay, so that's a big change, right? And to
Yeah.
your point, now I don't have healthcare insurance, right? I don't have taxes being taken out. I don't have 401k match, right? I don't have my disability insurance that I had through that group. So now what happens? And we saw the spectrum of these 100 doctors, right? You saw early attendings, you saw 50-year-old docs that are making $600,000 a year, and they're like, "Oh boy, what do I do now? I thought my group was good enough. In all actuality, it wasn't, right? But now what do I do?" And the hard part for that, Dr. Lumley, is if I'm asking for 30 grand a month in coverage and I'm 50, and maybe I have high blood pressure, or I'm taking an SSRI or whatever it might be, it's going to make it really hard to go get that policy, right?
Got it.
And it's
Yeah.
also going to be more expensive. So that's why we kind of talk to early residents and early attendings on locking that in right away is super important. Now the adverse side of that, we had policyholders in that group that got it while they're in residency, and they just called us and said, "Hey, I lost my group, I need to increase," right? Awesome. Perfect. So we kind of saw both sides of the spectrum. But what I always tell docs is, like, anything can happen, right?
Yeah.
Not only from a disability perspective, but even an employer perspective. I could be a W-2 for 10 years and all of a sudden,
That's wild.
that's gone, right?
That
So
is
those
wild.
things
Yeah.
happen.
Yeah. Okay. So, all right, let's, because we talked about like you get it through your employer. We've talked about stacking it, which I think is like super unique. Has not been something that I've ever thought about. But, as you think about the number of people who do moonlighting outside of their job and have alternative sources of revenue, point
Mhm.
0.8s, 0.6 FTEs with their full-time job, and then
Yep.
pick up other weekend gigs. And then this last one of like, I'm an attending. I was W-2. Now I became 1099, either my choice or not my choice. How do people sort of go about the process of enrolling for disability?
Sure,
Through
sure.
their employer or outside of their employer through someone like you?
Yeah, so through their employer, it's going to be upon orientation, right? So if I start a new gig, I'm going to sign my onboarding paperwork and I'm going to kind of check those boxes, right? That's going to be kind of standard. Now, a lot of times, I don't know if I mentioned this earlier, with group coverage, 99% of the time, it's not going to be true on occupation. Okay. So if you're, clinical anesthesiologist or you're a
Yep.
surgeon working at a hospital system, any group benefit that you get is not going to be ONOC. Okay. So if you can even remotely be a Walmart worker, right? Like a greeter and earn income, that benefit's going to stop. Okay.
Wow.
So
Okay.
really
Got it.
important to know with group coverage. What we always recommend is going to find an independent agent. Okay. And so what does that mean? You want to find a broker that can show you all of your options. Okay. And so I always kind of break this down when we do our lectures. There's three really ways to buy. Okay. You can buy online, which, we don't really recommend because, as you know, there's a lot of nuances to disability insurance. And so, do your exploration, do your fact finding online. There's a lot of great intel out there, podcasts such as this. Go do your learning online, but don't buy it online. Second option is to go directly to a carrier, right? Those are called captive agents. Okay, so a captive agent's going to be able to sell you one product from one insurance carrier.
Got
Okay,
it.
now that may be good, right? There's a lot of value in that, but what you're doing is you're siloing yourself out of the other options. Now, I've talked to a lot of residents. You've been a resident. Time is your most precious commodity. So, do you really want to go shop five different
Yeah.
carriers?
No,
The
I
answer is always
don't
no,
know.
right? You don't want to go do
Yeah.
that, right? And so the best option is really to go with that independent broker. And so we and most other brokers out there, there's a lot of great brokers. We'll work on behalf of our doctors, obviously, but we are the middleman to the big five, is what we call them. So there's 5 carriers that offer true on occupation disability insurance, right? And so what we do is we provide those 5 options kind of side by side. Right. So, to answer your question, how does that process start? Well, it kind of starts with, I need to go fill out a quote. Okay. And that can be a lot of things. Okay. It could be 5 questions. It could be 20 questions. Typically, it takes about 5 minutes, but you want to be honest there, right? What prescriptions am I on? Like, what
Yeah.
medical history do I have? Okay. Because if you lie about those things, that can affect us down the line.
Got it.
But we have to, we have to get those quotes and get those personalized quotes. And from there, you're gonna want to go talk to somebody that, knows what they're talking about, right?
Yeah,
And so, again, if I hurt my knee, I'm gonna go to a knee specialist so that they can help me put a plan of care in place. Do I need surgery? They're gonna ask me a ton of questions. I'm going for that expertise. So you want to go have that meeting. Next step is to really just put an application in. Okay, so of those 5 options, let's just say that I have one in mind that, premium looks good, all the riders are good, it's everything that I really kind of think I need at this point, and I can grow into it.
yeah,
I'm going to submit an application with that carrier, and all that is I'm going to fill out a medical questionnaire, and I'm going to go into underwriting. Okay, and I think we talked about this on our pre-call. Insurance carriers are just big calculators. That's all they are,
yeah,
right? They're just assessing risk. Dr. Lumley, look, what's the risk on Dr. Lumley? And that's all they're doing at that point. And so from a resident's perspective or an early attending, it's a lot easier to get through underwriting. Why?
for sure.
We're younger, we're healthier. We don't have, we're not, rock climbing. We're not doing all these other things because we don't have time for it, right? We don't have money or time. So we can kind of go through underwriting a little bit faster. Again, back to my example, if I'm 50 and I'm asking for 15,000 or 20,000 a month in coverage, they're going to put a little bit higher lens on that, right? From
Exactly.
an underwriting
Exactly.
perspective.
Yep.
Yeah.
Yep.
So we'll go through that application and then we're going to get an offer back. Okay. So that offer is what we're going to sit. Now we actually have something to buy. I think that's a big misconception that I, want to kind of clarify. A lot of people don't start the process because they feel like, okay, if I put my name into a quote form, I'm going to have something to buy in 48 hours, right? Like, am I really ready for this? And we don't even have anything to sell you after 48 hours, right? Like you have to go through that whole process to actually get something tangible from an offer perspective to buy something. So that can take 2 weeks, it can take 3 weeks. And so I think the biggest thing is just to know that there's a process that goes through this, and it's not just a quick hit like, hey, I'm going to go get a life insurance quote, or I'm going to go get a P&C insurance quote, and I'm going to be in force right away. Like there's a whole process that goes in place there.
So we have, so we have folks that are on this podcast right now that are residents and fellows, attendings at various stages of their career, carving them out into buckets, saying, got residents and fellows in one bucket, we've got attendings in the other, wherever they are in their spectrum. What advice would you give to residents and fellows that are looking at this and saying, to your point, like, man, I have so much on my plate. This is crazy. I don't have time to think about this. Like,
yeah,
no, not right now. Maybe when I finish residency and I've got some time, maybe when I'm a young junior attending and I could take some PTO, I'll think about doing this.
Sure. And that's really the battle that we face, right? And as you can imagine, Dr. Lumley, we have a busy season. And guess when that is? It's upon graduation, right?
Yeah.
They were told at orientation they need it, and they were so heads down on training to become a doctor that, it just wasn't a priority. And that's fine, right? Everyone's kind of on their own timeline. But some things to consider are, every year you wait, you're going to typically pay about 5% more, right?
Got it.
Okay. So you're going to pay more just as we get a year older. Okay. So that's the first factor. Second factor is we're kind of risking our health to a certain extent. Okay. I had a situation last year. I had, a herniated disc that led to some blood clots and a foot drop and all this stuff. Otherwise young and healthy. Okay. But now if I were to go get a policy today, I would be declined.
Wow.
Right. There's certain issues that came up through that situation that would inhibit my abilities to go get a policy. So again, if I'm a second year resident that was kind of putting this off and that happened, I'd be in trouble because now I'm looking at income that I can't go protect. So we're risking our health at that point. And then the third thing I would say would be there's access to discounts. So when you're in training, there's discounts that these carriers will provide. Okay. It could be 10%, it could be 30%. But when we're talking 30% savings on a low rate because we got it in residency already, map that out over 10 years, 20 years, there's tremendous savings there. And so those 3 factors are really, come into play there. But the biggest thing is I'm so heads down. How do I lift my head up from time to time to think about, and what we always tell young docs is have a plan. Even if you're not ready now, know that, hey, I'm going to do this in 6 months and here's what my premium's going to be. Because I think a lot of folks will say, well, I just, I know it's going to cost me money. I don't really know what that is, but I'm just going to wait, right? I'm going to wait till I get that first paycheck, then I'll do it.
Yeah.
So which that can actually harm them. Again, you're risking your health and you're just going to pay more at the end of the day. So those are kind of the key components from a resident or a fellow's perspective of why they should do this kind of now, but totally get it. That, again, it's residency's head down. Like I'm going. I don't have a ton of money yet. Can I really even fit this into my budget? So all
So,
those questions arise.
so maybe a stupid question, but like, does anything change at all when I make a life change in residency or as an attending, and I'm no longer single, Dr. Lumley? I now have a partner or a spouse, and then ultimately maybe I have a family. Does anything change at all in the application process or in the need or anything like that?
Not typically on disability insurance, right? So they're looking at you as a physician, right? They're
Yep.
looking and they're assessing that risk. And really the rates are made up of five real key components, right? It's your age, it's your gender, it's your medical specialty, right? It's where you practice, okay, and then any medical. Okay, so let's unpack that
Got
a
it.
little bit. Specialty is interesting, right? These carriers will look at every specialty a little bit differently.
Huh.
And so
Okay.
when you look at a family med doc versus an anesthesiologist or an orthopedic surgeon, all the carriers will classify those as occupation classes, and some of them will look more favorably on others, right? So
Got it.
anesthesiologists, we know that there's a high probability that they're going to have a really good rate with one or two of those carriers, right? And so specialty is a big deal. Also from the standpoint of cost, right? A family med doc is going to pay a little bit less than an orthopedic
Yep.
surgeon,
Yep.
right? They're protecting more from an orthopedic surgeon's
Sure.
perspective,
Sure.
just from an
Yeah.
income perspective. Secondarily, state, that's a big thing. Where you practice, the carriers all look at states differently. California, as you can imagine, a little bit more expensive there, right? So if we are out, lecturing in a residency program and one of the chiefs is saying, hey, I'm going to go do a fellowship in California. Well, it's like, hey, let's knock this thing out now because you're going
Got
to
it.
save a ton of
Okay.
money.
Got it.
Or there's the adverse. I had this when I was in Miami. There was a chief that was moving back to Houston, and she was great, but I actually ran her quote. She was going to save money by
By
doing it
waiting.
in Texas,
Got it.
right? So it's like you have to look at those nuances because the rates are all, and that goes back to don't do this online.
Yeah.
Like you have to go talk to somebody that knows what they're doing, so they can really guide and navigate those different nuances.
Okay. Well, I guess, we're kind of butting up against the end of time. And I just want to ask, you have encountered thousands of young physicians throughout the journey of their career. And are there any you know, points of advice or things that you have picked up that sort of just stick out in your mind that say, disability insurance, yes, but beyond that, here are some things that I would just say you should be focusing on in residency that I think will kind of make your journey after residency a lot smoother.
Sure, sure. Yeah. And our mission lately has been more around kind of physician wellness and resident wellness. And so, the quote was given to me by one of our partners, Dr. Frances May Harden. She's awesome. She's an ENT surgeon. And she gave me the quote. It's if you don't make time for your wellness, you'll be forced to make time for an illness.
Wow.
Okay. And so I kind of thought about that. I'm like, okay, well, that's perfect for residents, right? Because they're so heads down that it's like, what social relationships am I not really managing? What, from my mental health perspective, am I not managing? My physical health, my financial health. And so we really try to break down into those four buckets and provide education from that standpoint. Because again, they're just wondering, hey, what's my attending going to ask me? Do I know that? Do I know the answer to that?
Yeah.
Right.
Yeah.
And so, from that standpoint, we like to look at all of the resident wellness kind of bucket. And so that quote really speaks to it. But, and even being at ASEP this week, there's so many, like we talked to a really good tax attorney just for docs, right? He was an emergency med doc, really good partner there. But you really have to go find your team.
Yeah.
And we always kind of equate this to like that back to the Henrys. doctors that graduate and come out of training have a target on their back, so to say, right? They're going to be high income earners. So it's kind of like that NBA draft pick or that NFL draft pick, right? Bringing a little bit of levity. We're not making 10 million guaranteed right out of the gate, but we have a really high opportunity to go earn income. And
Yeah.
so a lot of times there's those targets on their back. People want a piece of that, that income. Okay. And so we always talk about finding your team, find a really good insurance broker, go find a good wealth manager, go find a contract negotiations lawyer, right? I know, you chatted with Michael Johnson last time. He's awesome, right?
Yeah.
And so you got to go find somebody that can go navigate those things and really build that team. And then ask yourself some questions, right? Like, do I trust these folks? How do they get paid? Right? If I'm going to give you $1,000 a month, like what's your cut? What's in it for you? Are they going to answer the text or the phone call if you need them? So,
Exactly.
we really talk about building that team, and it all kind of goes back to having a plan.
Yep.
Okay. If
Yeah.
I don't even know what I don't know at this point,
Yeah.
and so if I can start to make a plan, even in year 1 or year 2, I'm going to set myself up for better success upon graduation and into my first couple years of attending, right? Like I have that plan. I want to go execute on it. Obviously, I'm going to, finish training and be the best doc I can. But, I've also got these other things that are super important to me, and I know what I'm going to go execute on. So those are kind of the,
Yeah.
the teamwork approach that we like to talk about.
Yeah, I think about it like, assuming you've got the trust and you have the experts that
Mm-hmm.
that that you do trust, forgetting the target behind your back, that you've got a team that you put together, um, I think about physicians so much. You never want to like boil down what you do to a monetization of time, but when you are, but from a time standpoint,
Mm-hmm.
the hours spent on doing the research online, on pursuing like just
Mm-hmm.
the slightest differences between brokers here or contract attorneys here, and the time saved in that from that research could be
Mm-hmm.
spent in so many better ways, whether that's the mental health, whether that's a time with your family, whether that's dinner, whether that's going to the gym, things like that that are so much better for you outside of the hospital. And frankly, when you look at the, as an attending, the high earners, like when you monetize the time, the amount of
Mm-hmm.
time you're spending doing that kind of research, it's not worth it. It doesn't go around the
No.
block.
No, and that's where I love that you guys do things like this, right? Like we want to really go find that partner network where if we're talking to somebody and they bring this up, we want to be able to save them time because it's somebody that we trust, right? I think
Yeah.
that's why, Doc2Doc and Pattern have such a good relationship. There's a similar ethos there. I was able to lecture with Dr. Marshall last month, and that was fantastic, right? And so, bringing that financial expertise from a physician's perspective won them over. I mean, you should see them. They were just eating out of the palm of it because they're interested in this stuff,
Yeah.
right?
Yeah.
And
Yeah.
so, but to your point, there's also a lot coming at them. I mean, I've
Yeah.
had residents scroll through their email and you can see that they're just literally getting hammered with emails. And
Totally.
that again, that target's on their back right now too.
Yeah.
So don't think it's just when they start earning that income. And so that's where I think it's of utmost important for groups like you, groups like Pattern to really push good content out there so that they can learn. But it's also incumbent upon the program directors, right? Those programs, how do they vet these partners to come in and really provide good education so that
Sure.
I'm not coming in and bringing somebody in that's just going to sell. Like
Yeah.
I want them to walk away with some value, like they learned something.
Yeah.
And so that's really, really important. But your time management and what's the cost of an hour, I mean, that's meaningful. It really is.
Yeah. Well, listen, for everybody that is on right now and everybody that's going to watch this, I have personally learned a lot. I mean, just at the baseline, this concept of stacking, while I don't have a job outside of my anesthesiologist position, I know a lot of people who do. And that is a really interesting concept and one that I'm certainly going to bring up with them as they think about peeling back to a partial FTE and taking on a side gig of like, have you thought about the coverage that you need there?
Yeah.
So Greg, this has been fabulous. I really appreciate you taking the time to be with us this evening. And any last messages for the audience before we break?
No, I would say, again, thank you guys for having us and thank you for the partnership. I would say, just remove that negative connotation of insurance at times, right? And
Yeah.
really think about that as, how do I protect my lifestyle? And any good financial plan, the basis of that is income. And if I can't have that income due to whatever it may be, how do I go protect that ability so that I can go do the things I want to do? So, think about it from protecting your lifestyle, protecting the investment that you are making in training, right, and into your career. That's what's most important. So, yes, it's insurance, right, but all we're doing is kind of protecting what we've invested in ourselves.
Awesome. Thank you so much, Greg. And for everyone here that's been watching, really appreciate the time this evening. And I hope the folks that are seeing this afterwards enjoy this second installment of Fireside Chats with Doc2Doc. So thanks very much, everyone. Have a nice evening. Are we recorded? Stop, Rebel.